Everyone is so excited for the CPI news. Look over here. We got CPI at 3.5% year on year, where the prior expect was at 4.2. Now, that's a 0.4% drop. And a lot of people are saying that we haven't had a drop of that much since May of 2020. The narrative is softer inflation could revive rate cut bets, weaken yields and the dollar, and support stocks and Bitcoin. A lot of people on social media believing this is the next pump. You see headlines, odds of an interest rate hike just dropped to 16%. Yeah, for the 29th of July, yes. But in terms of the rest of the year, we're still looking at rate hikes. On top of that, oil is pumping to new highs, and the controversy of the fact why this month's CPI became lower had a lot to do with a possible peace agreement within America and Iran. Whereas now, that's not really holding up anymore, and we're at a full-blown war with news headlines like this and this. But here's the thing, though. Fundamental aside, there are some really strong technical indicators that are proving that the market is switching a little bit more risk on. Copper versus gold is going to touch its 200 SMA. We know the ISM business manufacturing has been ranging upwards and touching into this 200 SMA for support as well. Bitcoin is setting up higher highs recently. Ethereum is coming back into its multi-year range over here. And at the same time, ETH BTC is breaking out to show strength for altcoin support. Combine that with recent news events, Clarity Act, and Japan going all in on crypto, we have such exciting things to cover today. So lock in as we share this very exciting week. Hello, everyone, and welcome to Strategic Markets, your place for technical and fundamental analysis all at once across many markets. Now, into our midweek session, and I am happy. Look, any single day, CPI goes down. We've gone down to 3.5% year on, when the expectation was 3.8 and the prior was 4.2, right? 0.4% reduction. On core CPI, it's 2.6, whereas the prior was 2.9, so 0.3% on that too. And yes, inflation going lower and it being easier for people to spend and being able to survive on a lower cost is a good thing. But this narrative of the fact that softer inflation could revive rate cut bets, weaken yields, and the dollar and support stocks and Bitcoin, I'm not really fully on board with that. When I'm seeing Brent Crude do this, in the last 1 week, it spiked from $70 all the way to $87. That is a massive move when you consider that for the month of June, there was a 29% reduction from the start of the month all the way to the end of the month on the understanding that there was going to be a peace agreement with America versus Iran. Now that oil is firing back up, what do you think happens when we go back to the $100 level for oil? Well, it's very likely that CPI numbers just get erased, right? And when you have headlines that say Iran wants to close the Strait of Hormuz and America saying, if you do that, we will turn your oil fields into a massive parking lot, okay? Then you have North Korea saying that, hey, we are ready to target our nuclear missiles on the Pentagon. And then America saying they have the capabilities too. And if they cross the line, there will be a swift and decisive and overwhelming response. International tensions are high right now. And even though the Strait of Hormuz status of it says closed, we have only had 19 ships transit through in the last 24 hours. There's a lot of uncertainty in the market, which is why celebrating the CPI data very early and, being excited to join the pump in the market before not having done a full review as to what's really going on could be a risky bet. And that's what we are here to show you today. Because a news headline like this, where it says odds of an interest rate hike just dropped 16%, and yay, this is great. The concerning aspect is, yes, it may be not hiking this particular 29th of July Fed meeting, but on the 16th of September, all the way until next year, they're still saying that 2 rate hikes are in play. Now, I've made my matters really clear on the fact that I personally don't think rate hikes occur, but I'm just saying, honestly, if oil does keep going from here and America doesn't wrap up issues with Iran, then yeah, this is really concerning. And then we very well would have to possibly consider hiking rates because the bond market is not doing well as well. And for many of you who don't know, the bond markets have a correlation with interest rates very strongly. And we have been covering very recently the fact that the difference between the 10-year yield and the 2-year yield has to have a stronger spread. Whereas, generally it can be the 2-year yield is like around 2 to 3%. But for both of them to be just 0.33% apart, that means there's not a lot of growth in the American government economy itself. And last time we covered this, we were sitting at 0.39%. Today, we're sitting at 0.33. So the spread is just getting narrower. And people's belief in the growth of the American bond market is actually lowering consistently, which causes pressure on borrowing rates. And that flows onto small to mid cap businesses such as the Russell, which have been really struggling to grow because they don't have liquidity to be able to take against loans for short term growth to medium term growth for the businesses. So that is all to keep in mind. Now, regarding this particular monetary policy, and something to be on the lookout for, is the fact that Kevin Warsh is going to be speaking on July 15th. We've covered this a fair bit on this channel. This is expected to be a big discussion as to how he's going to see monetary policy, possibly inflation calculations as well. So pay attention to this because this is probably going to add a lot of volatility to this week. And SPX on that particular matter, we were discussing this last week, is currently having a bit of a breakout from this sideways triangle. So that's something to look out for because we also discussed in last week's video that war has a positive effect generally, especially in the tech markets, because a lot of people jump on and start shorting the market. Whereas an indicator like the SPX is generally built for on-looking future markets, right? And if people are pricing in peace or better deals, they're generally likely to buy. And in that particular case, those short sellers generally get liquidated and the market moves up. Now, that's not generally the case every single time. And when there's real fear in the market does move downwards. But in this particular case, what we've been noticing is in the points of war, if other indicators such as copper versus gold or ISM manufacturing are looking good, then generally the market just tends to keep moving upwards, which we have some exciting things to share with you. This copper versus gold just made a higher high. Now, this is on the weekly chart, and on the weekly chart, we are testing this 200 SMA. But if you look on the daily, yeah, we just set a higher high, guys. And this is really cool because copper versus gold, we've talked about this multiple times in the channel, is a very good growth indicator for risk on assets. So when you look at this particular higher high just made within the last 2 to 3 days, and on the weekly coming towards testing the 200-day SMA, while you have the US ISM manufacturer index also going higher, now testing the 200-day SMA for support. This is why the markets are still moving up because they have a little bit of hope in the growth aspect of American economy from a manufacturing perspective. This is why Bitcoin is having such a strong price action in the last 2 to 3 days as well. Obviously, I can't say that this is 100% causation, but there's definitely a correlation happening in the markets right now. You can see that Bitcoin, we were in this descending wedge pattern, and then we basically broke out of this particular pattern, tested for support, and now we're consistently moving up, setting higher highs and higher lows. Not to mention that on the weekly chart, we do have this strong bullish divergence where the price just keeps moving lower, but the RSI just kept moving higher. And we have highlighted that in the past, and this has happened multiple times across 2022 and in the instances over here, years of 2017 to 2019 as well. So that particular indicator of a bullish divergence has given us a lot of signal. Now, whether we clear by the end of the month 70K, that's a really interesting point of discussion. And we're going to need really strong narratives for that, which are currently in the making. So if you look over here, Japan has outpaced the US on crypto regulation. So Japan has officially passed a bill paving for ways where crypto ETFs are basically cutting crypto taxes from 55% to 20%. While the US is still struggling to pass the Clarity Act, Asia is going all in. We also covered last week that Taiwan is moving forward, that certain aspects of Russia is moving forward. So a lot of the world is moving forward with crypto regulations. We also have In this particular week, on July 17th, the U.S. House Financial Services Committee holding a hearing on the impact of Clarity Act in New York and a potential Senate law floor vote possibly happening this week or next week for the Clarity Act, which could be really good for the markets. So if the narrative is falling along and price action is working with correlation aspects to copper versus gold, this is actually looking good. It's looking hopeful. That's what I can definitely say. When you combine that with the fact of ETH's recent price action, Ethereum, just like it had a bit of a fake out going up from this sideways triangle pattern and then coming back down, on the bottom side of thing, it's now actually going back into the triangle again, which is a good thing. Technically speaking, because if we have any hope of ever moving up, we do need to come back into this particular pattern. And once we do, then we can decide whether we want to range within the pattern or not. And if we have strong narratives, we can. But very beautifully so. And this is why I really like technical analysis. We broke into the pattern, went higher, and now we've just come back to touch that particular support line. And we are holding above it pretty well. Now, in the weekly chart, if we actually do close above this particular green line, I'd be really happy to see that. But we're going to have to see that by the close of this particular week. So hold on to that as to how that progresses. And remember that by most likely when we publish this video, PPI data is going to come in as well for US as well. So that's going to make a massive impact as to how the markets progress ahead. And likely, in my opinion, I think that's going to be positive just because it correlates with CPI data. So that could be another reason why the market pushes from here onwards. But another a confirmed indicator of price movement is Ethereum versus Bitcoin. Ethereum's strength against Bitcoin, you can see over here, we have smashed through this particular red line of resistance on the daily, closed above it, and now likely going to close another green candle. Hopefully that sticks and Ethereum has its way to shine. So yes, CPI went down. I'm very happy to see that. I'm very happy to hear that. But we still have an ongoing war. And until that doesn't clear up, I do have concerns, right? Now, there's some technicals flashing, such as copper versus gold, such as ISM, which are correlating with risk on assets, such as Bitcoin and Ethereum, pushing the price up. And when I see the fact that Trump says, hey, the US Space Force have these cameras that can read a possible Mohammed's name tag in Iran and be able to strike it. Yes, it makes me want to believe that America has control and they're missile targeting everything that could possibly interact with closing Strait of Hormuz. And basically they're going to take it by force and open the Strait of Hormuz for everyone's passage. And this is great to hear, but who is it coming from? Right? And how many times have we heard Trump say one thing and it happened another? So what I really want you to be looking at is the price of oil. And if this keeps going up $90 or to $100, it is time. It's just a time to be a little bit concerned because all other indicators are going to be affected by that. So celebrate the CPI news, celebrate the PPI news, but just be on the lookout for this particular price action. On that, I will pass it over to Steve and see what his thoughts are on the market.
And before you pass it over to me, can you keep that chart up, actually? A lot of people saying, yeah, the chances of a rate hike is now reduced to 16%. The problem with how a lot of people interpret CPI, and even PPI for that matter as well, is a lot of people tend to interpret it as a forward-looking indicator. This is a real major issue because when we're looking at CPI and PPI in general, it actually is a lagging indicator. And you highlighted that perfectly through the use of this chart right now. Because what you've done with that second pink box is highlighting exactly what CPI is looking at. It looks at the previous section of time. CPI would be calculated in relation to one of the major components of CPI, crude oil, people putting petrol into their cars, prices of groceries, and those type of things, price of petrol and so forth, coming down over time because Brent Crude is coming down. So overall, inflation comes down as well with it. So everyone starts seeing that's what's influencing the CPI itself. So what would we expect the next CPI reading to be in the future?
That would be impacted completely for this 23% rise that we have. And Lord forbid we go back to the $100 level again, expect the CPI numbers to be very similar to where they were before.
Absolutely. So overall, that is what we would expect from the next CPI if we are going all the way up to that level there. And then everyone will be going, oh my gosh, everything's the world's exploding again. And that's the kind of thing there. So overall, that's the way people interpret it in the bad way. It's actually a lagging indicator, not a forward-looking indicator. So if everyone started interpreting it the correct way, then there'd be no issue. So I'm in total agreement, exactly the way that you're thinking there too, Yash, in terms of how we need to be looking, and we need to be looking forwardly. So chances are, more than anything else, we still have rate hikes on the table. And why? Exactly as you said, the bond market is still through the floor. And I'll cover that as we go through. But you've raised some excellent points throughout your entire discussion there, and I'll carry through as we look through some more of the charts.
Thank you for that, Steve.
Excellent. Okay, so carrying on with that, you can see these are the charts here for the TLT. So even after all of this information was actually released through the week in terms of the CPI data, and also now coming up towards Kevin Warsh's speech, which will happen later on today. So basically, we've got the 15th coming up as we speak. This is the state of the bond market right now. And as you can see, we are still at multi-month lows. Not much has changed since the weekend. We are still well below all of the moving averages. We're still well below the quarterly VWAP. We're still well below September lows. We're still well below the prior support back in January, which is now acting as a resistance. Are we having any major improvements here? Are we seeing highs in the bond market, which would then correspond to lows in the interest rates? No. So overall, where is all this talk about, wow, really, really reduced interest rates overall? No. This is the state of the interest rate market. Well above all of the moving averages, well above the 50-day moving average. There's no reason to be thinking long term that we're going to be having any reduced interest rates to a large extent. There is no change in terms of exactly what we were talking about over the weekend in relation to any of these aspects here. The only way that you would really see a massive change in terms of exactly what's going on would be, say, like if Kevin Warsh has this major rebuttal of anything that's basically been going on in terms of anything to do with Fed speak, and then all of a sudden you see the rates themselves fall to way below here in terms of any of these moving averages after today's speech. That would be an absolutely massive turnaround in terms of what's going on. You would need the bonds to essentially change from where they are here at the 84 level in terms of the 20-year plus bonds to probably jump up to around about the 87 level by the end of today. That would be what you would be needing to see in relation to a major turnaround from 2 rate hikes by the end of the year to absolutely nothing. So all of this talk of what you're seeing in terms of those kind of headlines that are actually being released by some of those people on Twitter or any of those kind of things there, where it's coming from, completely unfounded. Now, the interesting thing that Yash also mentioned is copper versus gold. Now, over on the weekend, we were at this particular situation right here. So we were basically sitting right underneath the 50-day moving average at this point. You can see over the last couple of days, copper itself has actually made a pretty good advance past that 50-day moving average, being that blue line. On top of that as well, the lagging indicator has actually jumped just a little bit above the unit price of where the unit price is closed around this section here. If you take a look over the left-hand side, it hasn't got above the Tenkan-Sen blue line over on the left-hand side there, so we still haven't really launched massively. But one thing to really keep an eye on the Ichimoku curve is the Tenkan-Sen blue line has actually crossed over the baseline towards the edge there. So that's actually showing some more bullish tendency in relation to copper. So things are actually starting to look pretty good overall with this. But the interesting thing to note is if we take a look at gold and silver itself, there has been virtually very little change in relation to these particular precious metals. Looking at gold first, remember how we were talking on the weekend about gold and silver not doing much whatsoever? Well, have a look at this. Gold still doing nothing. In fact, if anything, it's actually got a fairly negative tinge to it. In terms of silver, the same situation. Not really much going on there at all. So this slight rise in terms of copper, as well as the slight decline in terms of gold and silver, is actually the real reason and real catalyst behind the copper versus gold incline. So go to speak in terms of all of those things. But that could be enough to actually be keeping the markets overall, keeping towards that elevation that we're actually seeing there. And that could be the thing that's actually supporting everything in the overall scheme of things. Because you have to remember as well, when you have copper versus gold actually on the incline, like Yash was actually speaking about before, that generally supports the markets that you see in terms of technology. But when we take a look at the technology market in terms of the Qs, for instance, are we really seeing a large amount of strength there? it's not that great. We're just really keeping our heads above water at this point in time because we're just above the short-term moving averages and the 50-day moving average here. And when we take a look over at the Ichimoku curve, we're just above the cloud, and we're just above in terms of the Tenkan Sen being above the baseline. It's 50-50 at this point. I wouldn't be thinking overall that we're really in a large amount of strength here at all in terms of the cues. When we take a look at the SPY, we've got a little bit more strength here with the SPY, especially with the recent crossover of the Tenkan Sen over the baseline. But we haven't really got this lagging indicator completely clearing above the unit price at this point. So we've got a little bit of strength here in terms of relative strength in the SPY being the broad market 500 stocks of the US market, but it's not really a large amount of strength overall when we take a really, really good look at things. And there really hasn't been all that much change with all of these indices compared to the weekend. So I'm not really all that convinced at this point of a large amount of strength. The VIX, interestingly enough, actually did rise a little over the last couple of days, but not enough to clear the 50-day moving average. So we've still got a little bit of concern in the markets. And in terms of the dollar, it's still remaining fairly stubborn, even though it's starting to try and actually decline a little. You can see that that's actually beneath the short-term moving averages at this point, but it just is really, really remaining stubborn. It can't seem to break beneath these, if you want to call it a support level, because we're actually getting a lot of wicks here. Every time it tries to actually go down, it just bounces right back up. It's a really, really strange aspect. You can really see it very clearly on the left-hand side in terms of the Ichimoku curve, because every time it tries to hit that baseline, it just keeps on bouncing up, which is really, really fascinating. Other than that, I can really not see much change from the weekend, so I'm not really going to actually harp on much more than what we actually got here in terms of anything overall. But there really hasn't been all that much change with anything else. One thing I will actually raise with you, though, is SpaceX. Have a look at this since the IPO. It is really not performing all that well at all. So you can see ever since it actually broke through the yearly VWAP that actually formed over here after day 5, it has just absolutely struggled and not really doing much whatsoever. It attempted to get back up above through that VWAP back here on the 1st of July, and ever since then, it has just basically struggled and struggled and struggled. And it doesn't look like it's actually going to be performing all that well today either. You can already see in terms of the pre-market, it may actually just start to rise a little bit, but it's not really going to be getting much above, even going towards the high of 143 from yesterday. Only looks like it's only going to be opening at 137 today. So overall, not really a great performer considering the high that it reached, 225 on the 3rd day of trade. Not really much change from the weekend, but there are some dynamics going at play, I think more in terms of some rotation more than anything else into certain areas. Say moving into copper, moving still out a little bit out of gold and a little bit out of silver, but really not much movement going on in terms of the actual indices themselves, which I think is really, really fascinating overall. And still a little bit in terms of movement a little out of tech as well, and just little sections going in and out in different areas. One thing to really keep in mind, like you were saying before, Yash, you've got the speech by Kevin Warsh today. Keep an eye in terms of how things go, especially in relation to the bonds, whether or not those bonds have some major movement one way or the other. If those bonds decide to really fall through the floor even more, that's giving even more indication that those rates are going to be potentially rising even higher. So that could put even more pressure in terms of, especially in terms of the Russell, and that would mean the small caps themselves are really going to be struggling even further. With that, mate, I'll pass it right back to you, and we'll see everyone on the weekend.
Thank you so much. Pretty much Steve has summed it up, guys. CPI data is great, but right now it is not the holy grail because this war is in session, and if Brent Crude moves up, then what happens to CPI is what's actually already happened in the past. So keep that in mind as you progress ahead, but indicators such as copper versus gold and ISM are signaling a little bit of a risk-on environment, and risk assets such as Bitcoin and Ethereum are correlating. So if that continues to show strength, then maybe it's time to have some exposure to risk assets like I personally do, not financial advice to anyone else over here. But with that being said, thank you so much for joining us along for another session. If you've liked what you've seen today, please drop us a like. It goes a long way. For today's comment, put the word forget CPI because we're focusing on different things and we will look at every single comment. Just want to give a shout out to Mark. Mark, always love your ongoing support. So thank you so much for that.
Absolutely.
And a new commenter, my sensei. That was really nice to see.
Yeah.
So
Welcome aboard.
jump on the comment bandwagon. Like I said, as up till 5 commenters, we will give you a shout out on every single video until someday we go above that. Then in that case, I might run out of steam to name every one of you. But with that
No,
being
I'll
said,
take over, mate.
appreciate your support. We are growing slowly and we really appreciate that. And for those who have jumped on the bandwagon to subscribe with us, thank you so much. If you are enjoying the journey as well, please subscribe and support us along the way. It really goes a long way. But with that being said, thank you so much, everyone, for coming along to this session. We will see you on the next one.
Thanks a lot, everyone. We'll see you on the weekend indeed. Bye for now.